Hey, good morning everybody. It's Scott Ulmer here. Happy Friday morning to you. Wanted to just share something that has been in the news the past several days and certainly worthy to be discussing with you. Unless you've been hiding under a rock, the Fed has raised the interest rate second month in a row. This time they raised it 3/4 of a point. So last month in May they raised it 1/2 point, and in June they've raised it 3/4 of a point. So two pretty significant raises in 2 consecutive months. The 3/4 point raise, which just happened yesterday, the day prior, it's the biggest single interest rate raise in almost 30 years. I think it was 30 years. So there's a lot of chatter, a lot of people talking about it. The stock market is certainly being affected by that, and in some good ways, some bad ways. That the market is kind of back and forth. But I think the big question that I've been asking myself, and I assume you've been thinking the same, is how does this affect the real estate business, the real estate economy, and ultimately how does it affect our business here at PINK? And I want to just kind of share my thoughts. So first and foremost, the big difference between today and 2008 is there is limited supply. There are other things. The banks are much stronger. There are not all these different types of mortgages that people couldn't afford. So there are distinct differences between 2008. The market is not anywhere near the condition it was in 2008. So I don't think anybody at this point believes that there's going to be some sort of a duplication, replication of what happened in 2008 because of those factors. The biggest one today is that there's just limited supply. So I actually read another article last night that said that prices are going to still continue to increase, even though you're seeing that there's these 20% price drops in certain markets, and that there's a cool off, and that sellers are actually reducing their price. Oh my goodness, someone's reducing their price, right? That's usually what happens when they list it high. And by the way, as an example, kind of a snapshot in time, you have an open house on Saturday. I read this just a few days ago, and this open house, they get 18 offers above list price. And this past weekend, they only got 6 offers above list price. I mean, what's the world coming to, right? But that's a real example. And so are things going to change and cool off? I think they're going to cool off. When rates get raised, what happens is that prices out people in monthly payments. And so people that were looking for a certain payment that was in their budget, they were qualified for, as rates raise, now that skews the debt to income ratio, and ultimately they will not qualify for that type of loan or that price of the loan. People that had built homes that put deposits down today that wouldn't have the home built for 9, 12, 18 months, whatever the time frame is, and supply chain delays, things of that nature, the people that put the deposits down on the homes that they were building, now as rates have risen, are getting priced out of their own home that they were building. So that's a segment of the real estate world that is really getting affected. That's not something we really deal much in. But at the end of the day, we do see a cool off. We also see sellers that are kind of been spoiled getting these high prices are going to have to maybe come a little bit more to reality. And I think that's going to mean more opportunities for lease options, executive lease purchases. I think the terms business, which is really the backbone of PINK, which has been really tough the past couple years since COVID, I see that coming back into play. I see the value proposition coming back to the table, and something that we can really run with. So we're still excited about the cash offers. We're still excited about giving multiple offers, having the ability to make a cash offer and a terms offer when applicable. But ultimately, with rates raising, there's going to be some cool off, and we do think that that's going to open the door for more of the executive lease purchase. We're monitoring it every day. It's what we do here. We try to be students of what we do on a daily basis. But we're making calls all over the country every day still, and we will keep you guys posted on what our progress looks like. If we think that there's more opportunities for ELPs and the lease purchase approach, we still believe in it, obviously. It's just been tough with the market conditions. So we see good things happening. We're excited about what's in front of us, and we hope you guys are too. Remember one thing, and kind of my final point here, whether there's a recession or not, doesn't matter. But that means good for us. When a recession happens, when the market cools off, when there are changes, when you're a real estate investor, those typically mean more opportunities. So keep your eyes on not only our videos, but certainly what's going on with the Fed, what's going on with the market, with the stock market, the economy, and of course the real estate market. All those factors are going to play into how we pursue and how we end up generating our leads and doing our deals. But remember that when there are changes in the market, that means opportunities for us. So don't be caught being a doom and gloom naysayer if things are going the other direction, recession, all those things, and inflation, gas price, all those things are really tough, but understand that at some point there's going to be opportunities that stem from it, and we want you to be ready like we're going to be ready. So anyway, want to just share that. We have more to come as we're monitoring rates and how that's going to affect everything, but I just want to do a short video for this Friday and share that with y'all. I hope you have a great Friday. If you have any questions, you want to talk about this, you've got ideas, give us a call. We'd love to chat, and certainly would love to kind of share our thoughts in any more depth that you'd like. So have a great Friday, great weekend, guys, and we will see you very soon.